Good morning. Welcome to the show for today, Frontier Opening Bell, the 20th of November. I am Bosin Amofaye, and I'm so glad to have panelists for today and our regular contributors on the show. Orioluwa Odetunde from Greenwich Merchant Bank, the head of macroeconomic analysis. Good morning. And from Nairobi, the CEO and founder at Rich Frontiers Management, the man I call the rich man of Nairobi, Ali Khan Sacho. Thank you, both of you. We appreciate your time. Thank you, Ali. Thank you, Orioluwa. The markets, if you look at the equities market, again, globally speaking, a bit of a very topsy-turvy Thursday. So look at your frontier Africa there, including emerging South Africa, all in negative territory. Again, sentiments around the virus, the vaccine, and the fight over the political issues in the U.S., including the stimulus. Oh, by the way, Steve Mnuchin is asking Jerome Powell to return all the unspent pandemic-related funds back to the Treasury. It looks like everyone can use every dime right now, whatever is hiding. So let's put that away and go to East Africa, and the banking season reporting earnings not looking good, at least for now. Cooperative Bank of Kenya, net profit down 10%. ABSA reported 2 days ago, 65% negative. KCB says its profit will be down 25%. But I got a bit of a bitter story when Kenya is asking the G20 for a debt repayment, $690 billion US. But what's the problem between Tanzania Central Bank and the China Commercial Bank, and Uganda is building the 3.5 billion oil pipeline from the first half of next year? That's going to be one of the heavily invested oil and gas projects in East Africa. Ali, let's start with the Kenya's debt repayment rescheduling story. But let me quickly welcome Luke Ofojebe from Vetiva Capital Management. Good morning, Luke, the head of equity research analysis. Ali, go ahead.
Yes. So Kenya had previously said that they were not going to participate in this G20 debt relief program. They felt that ratings agencies would possibly downgrade Kenya's rating and also reduce Kenya's freedom of maneuver, particularly in the capital markets and the Eurobond markets. Now, what's occurred is the cabinet secretary, Mr. Yatani, said that actually, no, we will participate in this debt repayment. And it seems that this was a condition precedent of the IMF. The Kenya government was approaching the IMF for budget support. And I think the IMF said, unless you participate in this scheme, we are not going to be able to assist you with budgetary support. So I think what it's telling us is Kenya's freedom of maneuver is now seriously constrained. Kenya was ranked at 30% possibility of a debt default in a recent article quoting IHS Market. So significant development. It has put a lot of pressure on the shilling, which seems to have traded as high as 111 against the dollar in the last 24, 36 hours. And it's a significant development in the sense that it's telling us that Kenya has lost a considerable amount of maneuverability. And I think this is not going to be unique to Kenya. You're going to see this happen in many other African countries as well. If I can then jump to your Ethiopia Telecom announcing SMS fundraising for defense forces, this is the situation in Tigray province. Interestingly, the Ethiopian army accused Dr. Tedros of WHO of having a nefarious influence, and he put out a very dignified response, which I thought was extremely on point. But this is a very murky situation, Barson, in the north. You know, that famous poem by W.B. Yeats, things fall apart, the center cannot hold. And here you have the center trying to assert its control over the periphery. And, you know, this is like letting a genie out of a bottle. This could spread, into many other provinces, but currently it's Tigray province. UAE is involved. They're sending drones from Assad in Eritrea. So it's already spilled out of Ethiopia's borders. We were seeing a significant repricing of Ethiopian risk. Eurobonds have blown out about 200 basis points since this development happened. Co-op Bank net profit down 10%. Optically, that looks like a fairly good outcome when you compare it to what we've seen from ABSA and the likes of KCB. The problem here is, unless they've got a unique elixir where they are provisioning significantly less than ABSA and KCB, it will be interesting to see how this plays out. But at the moment, if you look at just the headline numbers, it looks as if Co-op Bank had some secret sauce over there, and we'll find out whether they really do or not. Tanzania Central Bank taking over China Commercial Bank. China Commercial Bank might sound as if it's some hefty institution, but actually it isn't. It was a thinly capitalized bank with about $1.3 billion in deposits. And I think this is this whole process of tier 3 banks not able to survive in the East African environment, and particularly not now when you've got this pandemic scenario unfolding. Uganda, $3.5 billion oil export pipeline. Look, this is a significant investment going to run all the way from the Albert Basin to Tanga, an old sleepy port from the old days in Tanzania. The question so far, which you've got to bear in mind, is the backstory. We had the arrest yesterday of Bobby Wine, this musician turned opposition candidate. The Kampala streets were on fire yesterday. I don't know if you saw some of the footage coming out of that. Yes, the army has gone in, but the fortunes of the next term of whoever's president are very much correlated to that pipeline being put in place.
Yeah, the report's talking about at least 9 deaths as at the last time I checked yesterday because of those street protests in Kampala. Quite a very unfortunate situation we're getting in a number of African countries, Tanzania and elsewhere, but in Ethiopia as well. Thank you, Ali. Just let's check it very quickly with the West African space. Of course, Nigeria's PMI came in just about 2 days ago. Yesterday, the Central Bank of Nigeria clarified the previous regulations around letters of credit, Form M for FX purchases and transactions, and also released what it calls its third quarter 2020 inflation attitude survey, asking respondents, more than 2,000, to look at the attitude to inflation, what will happen to the economy and their livelihood if inflation continues to go up or the other way. This document is out there. One good news for Nigeria was that Radisson Group yesterday unveiled its third hotel in Abuja. It's going to be the 10th in Nigeria, and that is due to be completed in 18 months, sometime early 2022. And the whole idea is to continue to expand in Nigeria. Radisson Blue says Nigeria remains one of its top markets on the African continent. Nigerians' banks' earnings are now coming out, and the numbers not as ugly as they were for some of the Kenyan banks, but of course there are pressure points that analysts are looking at. And Cote d'Ivoire is expecting its economy to rebound 6.5% next year. That's going to be a very tough one. How they're going to pull that up will be anyone's guess. Let me just quickly chat with Oreoluwa Odetunde from Greenwich Merchant Bank. When you look at Nigeria's economic story, look at the Radisson Hotel Group, do you really see this here in terms of Nigeria being that destination for hotel, hospitality, and leisure business?
Yes, I think the economy has a lot going on for itself, in that the fact that when it comes to services, the services segment of GDP, for example, it thrives and it makes up, about 50% of GDP. So, I think we're used to the fact that a lot of times, a lot of Nigerians are a lot more outgoing. They like to visit some of all these hospitality centers, have a good time out from time to time. So yes, for these, for Radisson Blue to come out and say yes, it's willing to enter space in Abuja just makes it's just clear that there are positive signs from what has been so far from its other branches in Lagos and also in Abuja. So yes, it's positive for the case also for Abuja, international clients or investors who are willing to come in and use spaces like that. So yes, it is a positive.
Yes, again, Radisson is a top end when you come to the hospitality or hotel business. So I should know it's a very top end, and I think they're investing in the future. By the way, looking at least post-pandemic period, what will perhaps likely happen. But look at the inflation attitude survey and inflation that we had just a few days ago, and the whole issue, the macroeconomic issue around Nigeria's food prices, food inflation, and the situation so far. What are your macroeconomic views on that?
Well, I think it's clear that we know that inflation is still not demand driven and it's a lot more push factors, fundamental issues really fueling the growth of inflation in the economy. So we're having that, yes, we're seeing some of these interventions by the CBN. We're seeing that there's more flows to the agricultural sector, but food prices aren't really at the low levels that they're expected to be. Seasonal factors are where another things that really disturb farmers during this period, and it really distorted planting during this period. So the harvest season was significantly underwhelmed. Prices of goods that are expected to be less than 50,000 have skyrocketed to about 80,000 or 100,000 in fact. So what we're even seeing is that prices are getting higher at a very unsustainable rate. A bag of onions that used to cost about 7,000, 6,000 in its food producing states like Kano. You're having that price of onions now currently selling in Kano, it's about 40,000, and you're bringing it to Lagos. You pricing the fact that there's a lot of insecurities on and transportation facilities are significantly underdeveloped. So eventually, when it gets to Lagos, you have a bag of onions selling about 80,000 naira. So it's clearly unsustainable, and you have that the minimum wage is significantly low for a lot of the masses. You have the fact that a lot of people lost their jobs during the pandemic period. So it's really hard for people to survive when food items are relatively high. And you also have to look at the fact that there's this lack of discretionary spending. So aside the fact that you're seeing a lot of Nigerians spend so much on food rather than other items. So you'd also see there would also be a ripple effect on all those other companies or firms that are not even involved in producing food items, because they will be significantly underpriced, being that demand is relatively low in the Nigerian economy.
Exactly. So when banks are lending to agriculture, with the numbers coming through and the loan impairment numbers are looking a little bit, a whole lot more unfriendly. Luke, isn't it? With the numbers we've seen so far.
Yeah, good morning, boss, and good morning, everyone. So like you said, two of these banks released the results yesterday, and those were GT and Access Bank. For GT, most of their income line items came in line with our expectations. We saw a growth in gross earnings as well as interest income, net interest income. I think the major thing to watch out for GT really is the interest income. I mean, so looking at what we've seen so far in the fixed income space, we've seen a consistent drop in yields. That's mainly a move by the CBN to support growth in the REIT sector. So next year, we're a bit worried that we might not see this level of performance from these top banks, especially from the likes of GT and Zenith Bank, given that these banks have not been aggressively growing their loan books since the start of the year. So next year, we expect interest income from investment securities to definitely drop because of the low yields we have at the moment. At the same time, given that these banks are not aggressively growing their loan books, we expect that income from loans should also drop. Then for non-interest income, we've seen like a consistent drop quarter on quarter in non-interest income. Next year, given the fact that we expect the economy to rebound across all sectors, we do believe that we'll be seeing more transactions on various channels. So we expect that to support their non-interest income. Then for Access Bank, really, it's been more of consolidation of gains from synergy. We understand that since the bank merged with Diamond Bank last year, we've seen like substantial growth in their gross earnings, especially from interest income from loans. So that really supported their performance in the 9 months period. Also, what stood out in Access Bank's performance in the 9 month period was the income from fees and commission. We also understand that the bank made about 200% gain from this line item. So this was mainly driven by changes the bank made in its trading strategy on derivatives as well as FX exposure. So next year, do we think we might see that run rate again next year? We doubt it. However, given the fact that we've seen more of cost synergy, materializing in their performance, we expect to see more of that, and we think that will continue to support their operations. So what I can just really say about Access Bank is that what we've seen so far in the 9 month period actually paints a picture of what we should expect for the bank going forward. Thank you.
Quite a whole number. Thank you, Luke. Quite a still number of earnings we're expecting out there to give us a kind of an idea of what the trend is in the industry. UBA numbers yet to come in. Zenith Bank and a few others are still outstanding. Yesterday, Sterling Bank also reported, although not a particularly stellar performance, by the way, when you look at some of the line items for Sterling Bank. Earnings per share came in flat. Net profit also came in largely flat. Non-performing loan ratio moved up slightly from 2.2 to 2.9% within the period under review when we compare that to the 9 months of last year. So let's move on to Southern Africa very quickly. I'm going to ask Luke a little bit later on the outlook on central bank's monetary policy. The Central Bank of South Africa yesterday kept interest rate unchanged at 3.5%. That's the repo rate. But Kengengo, the governor of the SARB, continued to warn that monetary policies are not alone to drive the economic growth for South Africa. That sounds pretty much, everybody understands that now. Zimbabwe seems to be making a whole lot of drive when it comes to remittances, 45%. I'm sure the Kenyans are looking. I mean, you have more Zimbabweans sending money home than even the central bank in Zimbabwe is making, $657 million US in 9 months. And Zambia's mining minister is trying to sound very tough and assuring everyone that the bondholders are not likely to seize the country's mining assets because of the default in the Eurobond repayment. Ali, just coming here, I think I just like the Zambian mine minister.
He's got a very fruity turn of phrase. I still haven't been in the river and the IMF standing on the bank. I mean, I must say, he's been pretty forthright, and I think one has to give him credit because he's been describing the situation with a degree of realism which was lacking for a long time. Nevertheless, these bonds are trading at around 42 cents in the dollar that he's referencing. And frankly, I think one of the trades of the year would be to borrow Zambian kwacha, convert it into dollars. You can borrow the kwacha at 8%, because I think what I take away from all of this is the kwacha has got to give some more because they're not going to raise interest rates. Meanwhile, they're in quite a conundrum here. So I think the problems remain in Lusaka. But you can never say never. I think we should have some kind of reconciliation at some point between the IMF and the World Bank, and once that happens, that will be the buy signal for Zambian assets. Zimbabwe diaspora remittances, that's a pretty eye-popping surge. I mean, the World Bank, IMF all predicting sharp slides in African remittance inflows, and bear in mind remittances overtook FDI and aid a few years ago, so it's a huge component in stabilizing currencies. And, you know, in my experience, Zimbabweans are very talented individuals. I mean, when I was in the UK, a lot of the nursing staff were Zimbabweans. You just have to look at South Africa. There's a huge diaspora there. So, you know, I think Zimbabwe has a great opportunity to tap into its diaspora, and hopefully one day many of them will come back, because the best capital of all is your human capital. SARB keeping the repo unchanged at 3.5. Interesting point that you referenced that the central bank governor said. And I think what he's telling us is that he's now reaching the lower bound, that, you know, it's not transmitting, it's not boosting the economy. I thought they just go for one more quarter point cut and be done with it, but clearly they're holding something back here. But I thought his point was a very valid one. Investec, although the headline revenue number is down 24%, net income down 15.6%, they excited investors by actually paying the dividend. And everyone got very excited in this tough world. When you get paid some dividend, you kind of do hoops. So goes Sun Gaming income plunging 74%. Maybe they haven't got an online business, because that's where the future is currently.
Thank you, Ali. Quick one, Oreoluwa, just about the Nigeria Central Bank Monetary Policy meeting on Monday. What's your outlook on that?
Yes, I think we still expect that rates will remain unchanged. I think rates at 11.5% remains significantly low. I think the central bank is trying to do so many things at a particular time. They're trying to keep exchange rates stable at a fixed rate and still trying to maintain low interest rates. It's a trade-off, more or less. You cannot do the two things at a time. In order for you to, and you still want to keep inflows coming into your economy. So in order for you to keep inflows, you sort of have to raise interest rates. But it's clear that you cannot follow that route. And they still need to remain accommodative. Or if you look at the fact that, you know, there's still this very weak transmission effect in the real sector. Take, for example, the survey that was just released, and, you know, the question was being asked to the respondents about their outlook on interest rates, and if they feel that it has actually decreased borrowing rates from the banks, and a lot of respondents didn't have an idea. So it's just clear it just shows the aversion of a lot of Nigerians to borrowing from the banks. So there's this low level of aversion to borrowings, especially for the SMEs who actually really need these loans. You see that, you know, that transmission effect still remains really weak for the real sector. So, you know, they are not really going, SMEs, which account for about 60% of the economies, are not even really going to these banks to loan, and they, you know, find other measures, petty measures of borrowings to sustain their businesses. So it's just clear the CBN will just keep rates, and I think it did mention at the last meeting that, you know, inflation was more of a structural factor, and it had really nothing to do with interest rates. So yes, we just still expect that they would maintain interest rates at current levels.
Okay, I get your point there, Oreoluwa. I think perhaps some of these factors, Ali, for the South African Reserve Bank, again, if Kegango cut interest rates, then look at the financial markets in South Africa. This is the government trying to attract 100 billion rand in investments over the next 5 years. So if you lower interest rates, then perhaps you're telling investors something about your financial assets. So perhaps they just decided to keep the SARB, say, let's keep the rates there at 3.5. Keep the financial asset investors happy, at least the financial markets, the foreign portfolio investors still very strong within the South African space. So those guys yet. Let's just see what the fiscal authorities will do between now and early next year. Then they can decide whether it's going to make a whole lot of sense to drop the repo rate a bit and support the fiscal authorities with some growth. I don't know how that will work out. Look, let me just get a sense of your outlook for about a minute or less on. Yes, sir, Ali.
No, sorry. I was just saying that was an excellent point you made about foreign portfolio investment rates, that you've got to be at a certain level, otherwise you're not going to attract them in. That's all I was adding to what you were saying.
Okay. So for the equity markets, I mean, from the start of the week, we've been seeing more of mixed trading. We understand that over the last 2 weeks, we saw a significant rally in the stock market. That was mainly due to the diversion of liquidity from the fixed income market to the stock market. And then since the start of this week, we've been seeing more of mixed trading. We saw some investors taking profit at the start of the week. It was just yesterday that I was seeing more of positive trading. I mean, so today, given the fact that some of the tier one banks have released their 9 months results, quite fantastic, better than expected. We do believe that will drive positive sentiment further in the equity market. So as a result of that, we expect investors to really cherry pick some of these tier one banking stocks, and that would definitely lift the stock market performance today. Thank you.
Okay, sorry, Luke, I guess we lost you there just a little bit, the connectivity. Let's just move on to North Africa very quickly, just because it's interesting to see the European Bank for Reconstruction and Development, the EBRD, launching 1.5 billion 5-year bond issue during the week. Very big news. And of course, the bank says they got a whole lot more than they bid for at the global debt capital market. The European Investment Bank, that's the EIB, has given 1.7 billion euros to support Egyptian SMEs. If there's any vote of confidence, there you got it. In the Egyptian economy and what the economy represents and how the outlook. Egypt's central bank issued 20 billion treasury bills. Of course, nearly all the central banks doing treasuries fast and furious. Egypt, Ethiopia, and Sudan started negotiation again on the $4 billion Nile Dam project. And Libya oil fields like sugar keep attracting more ants investors. Total is thinking of investing more as you see Libya's oil output now about 1.2 million barrels per day. Ali, just a quick one. In Egypt's SMEs, this 1.7 billion euros from EIB, it looks like a thumbs up.
Absolutely. And I think it's interesting. I look at both your headlines. EBRD, European Bank of Reconstruction and Development, of course, extended its mandate to look at North Africa as well. EIB, 1.7 billion euros, that's a big chunk of change to stimulate Egyptian SMEs. So I think in the context, what I take away from this is a determination by Europe to look at that Mediterranean economy and to look at the North African component of it as being very much part of the European economic bloc. And I think that geo-economic decision is evidenced in both these two top headlines that you have referenced. And it's an important development, I think, in terms of creating opportunity and economic growth in that part of the world. Just to touch on your other headlines, Egypt, Ethiopia, Sudan start negotiations on the $4 billion Nile Dam. I can't imagine there are many negotiations going on, given what the situation is in Tigray province. And Total mulling more investments in Libyan oil fields. That's a significant development because Libya has really been off limits for quite a while. But, you know, all the European buyers of crude oil tell me Libyan oil is the most desired one in Europe because it's very easy to refine and very sweet.
Great. Thank you so much, Ali. We appreciate your time today. And it's a Friday. TGIF to you all. Thank you very much. Ali Kansachi in Nairobi from Rich Frontiers Management. See you next week. Luke Ofojebe, thank you so much for being part of the show today from Betiva Capital Management and Arelua Odetunde from Greenwich Merchant Bank. Have a great weekend, everyone, and see you again next week. Bye for now.